Blake Boss here, folks. Today we're going to be talking 3D Systems. Shares of this company's stock are up 149% over the last year compared to a 27% return for the S&P 500. So just what caused this incredible rally in shares of 3D Systems? Well, I'll give you a hint. It didn't have a lot to do with the business of 3D Systems. But before we dive into the specifics of what's driving the stock higher, I wanted to kind of give a little primer on what causes stock prices to increase. And basically it comes down to two factors: how the company is doing, number one, and number two, how the market feels about the company is doing. So when it comes to how the company is doing, you can really equate that to how the company is doing on an earnings per share basis, sales per share, and cash flow per share, folks. And the reason we look at that on a per share basis is even if a company can increase earnings or sales by a large margin, it only matters to investors if they're doing that on a per share basis because you own a fraction of the company. The number two factor that can increase the stock price and what generally happens in the market is how Mr. Market thinks about the company, how the stock market thinks about the company. And you can tell how the stock market thinks about a company by looking at the multiples. That's the price to earnings multiple, the price to sales multiple, and the price to cash flow multiples. These multiples can change quickly with Mr. Market's manic mood swings, and in the short term, this is probably the largest influence on the stock price going up or down. Back to 3D Systems and how the business is doing, that first factor. Well, 3D Systems had a very busy last year. The corporation had a variety of acquisitions. I put this little table together to kind of show it to you. If we look at the table, they acquired Village Plastics. They recently announced they're going to acquire Xeric Solid Inks, Sugar Labs, CRDM Ltd, VizPower Technology, Phoenix Systems, RPDG, Geomagic, and CoWeb. Wow, that was a mouthful. Ton of acquisitions for this company. They've been snapping up people left and right. They also released a plethora of new products, from huge industrial printers like this one to entry-level scanners. All of this led to a negative 4% decrease in earnings per share at the company over the last year, an 11% increase in sales per share, and a 20% decrease in free cash flow per share from December 2012 until today, judging from the last 12 months from today back. Then why are shares up 149%, you might ask, when results look like they're down at a variety of metrics? Well, it's because Mr. Market raised its expectations by 3D Systems by 159%. That's the increase in the price to earnings multiples from 3D Systems stock from December 2012 until today. Basically, the stock market is predicting that 3D Systems is going to grow very quickly over the next 3 to 5 years. When we look at their earnings estimates for the company from a variety of analysts, the average estimate is 26% per year for the next 3 to 5 years on average, in order for Mr. Market not to get upset. Remember, stock prices, it's all about meeting estimates and the future expectations for the stock. So that's what the 3D Systems Corporation is going to need to achieve, and I'd argue they're going to need to surpass that to meet today's share price. But the takeaway here, though, folks, is this is a valuable learning lesson that show that a huge risk in investing is multiple contraction, as taught by investing legend Philip Fisher. He wrote the book Uncommon Stocks and Uncommon Profits. If you buy something in a hot industry and the market assigns a PE of 50, for example, so if we go out 1 year in time and let's say the market saw that PE multiple of 50 and it's like, we don't think that industry is going to grow quite as fast, and it assigns a multiple of 25. Well, that company would need to increase its earnings per share by 100% in 1 year time period in order to make up for that PE multiple being chopped in half. And if you watch the stock market, that's not too uncommon to see a PE multiple really contract like that. So when you're investing in an industry like 3D printing industry, you need to have a very long-term mindset, and I always argue that take your time, don't rush it. Dollar cost average in if you're investing in a hot industry. That way you don't have as big a risk associated with that multiple contraction. That's all I have on 3D Systems today, folks, but if you'd like some other great stock picks that aren't quite as expensive as 3D Systems, you can email us at retirerich@fool.com. We'll send you 3 great stock picks to help you save for retirement. That's all I have for you today, folks. Thanks for watching, and Fool on.